How will the election results impact tax and business policies? This is the Issues Watch podcast. Hi, I'm Jeff Kaszerman, Vice President of Government Relations at the New Jersey Society of CPAs, and welcome to the Issues Watch podcast. In case you haven't noticed, America is in the thick of one of the most contentious presidential races in history. We have two candidates with many stark differences on many policy matters, including taxation and economics. Today, we're going to talk with Miguel Martinez, a director in PricewaterhouseCoopers Government, Regulatory Affairs, and Public Policy Group. We're going to talk to him about the presidential candidates' taxation and economic proposals, how politically realistic they are, and what business leaders and economists are saying about those proposals. Welcome, Miguel.
Hi, thanks for having me.
Sure. So, can you give us a brief overview of the two candidates, their tax and economic platforms? In addition to looking at individual and business taxes, please also let us know about their tariff policies.
Certainly happy to do that. And first, I should say that even though I work at PwC, I'm speaking on behalf of my own personal capacity, not giving the views of our firm. But yeah, certainly let's dive in there. I think the tariff policy differences, that's probably the quickest to dispense with. Former President Trump has not been shy in saying that he believes tariffs are a useful tool for economic policy. And so we've heard him in his campaign propose a baseline tariff of 10% on all foreign-made goods into the US. And for goods coming from China, they proposed a 60% tariff. We haven't heard the same things in terms of tariff policy from the Harris campaign, though I do think it's known that the Biden administration did continue some of the tariffs that were put in place by former President Trump, but the Harris campaign hasn't really gotten into the specifics of where they would be on tariffs if the vice president were elected. This entire debate that we're seeing right now is being shaped by some people have called, the Super Bowl of taxes coming next year. I think that's a bit large of a term. But it is all about the expiring provisions from the Tax Cuts and Jobs Act. And as you may recall, the Tax Cuts and Jobs Act, the business tax reforms included in that bill were made permanent. However, things on the individual side were set to expire, most of them, or a large number, after 5 years. And so that's really what's shaping this debate, because that's going to be the biggest challenge for whoever sits in the White House come next year. And that's going to be the challenge for the incoming Congress. So for former President Trump, he wants to, of course, defend his legacy. He wants to make permanent those individual provisions from the Tax Cuts and Jobs Act. On the corporate side, though, he's even talked about trying to bring the corporate tax rate lower. We've heard them say numbers as low as 15%. And I'd say then, beyond the Tax Cuts and Jobs Act, this is where, you kind of get into some of those campaign season incentives for everybody, right? So we've heard, them talk about, eliminating taxes on tip income, eliminating taxes on Social Security benefits, increased child care and caregiver tax credits. And you've heard the same, some of those individual goodies, I'll say, from the Harris campaign as well. The Harris campaign does distinguish itself, though, when it comes to the Tax Cuts and Jobs Act provisions that I'm sure that comes as no surprise. You've heard her talking about, making sure that big companies, big business, and the wealthiest of Americans pay their fair share. Now, she has said that taxpayers, who's wealthy, I laugh, that number always kind of changes, and it's a bit, I guess it's subjective, right, in the eyes of the beholder. For her campaign, they say that any American or any taxpayers who make less than $400,000 shouldn't see their taxes go up. But she has, proposed some things like increasing because this would be a part of the TCJA repeal or repealing portions of it, right? That would mean for her campaign, they've talked about things that are in line with what you've heard from President Biden, from the proposals that he's put forward in his Green Book, his budget submissions to Congress, which are things like increasing the top income tax rate. We've seen them propose things like increasing capital gains taxes to put capital gains taxes more in line with regular wages. And again, yeah, and I won't go through the goodies. The goodies, she's there too, on the no tax on tips and what have you. On the business side, the things that, and this is kind of us reading the tea leaves based on statements that the Harris campaign has made in support of, saying that we support President Biden's tax proposals. On the corporate side, that would, mean things like increasing the corporate AMT. I believe the Biden administration proposed to going up to 21%, increasing excise taxes on stock buybacks. They've also proposed looking at some changes to GILTI, and limit, trying to make some more efforts to limit inversion. Some of that, they wouldn't go as far as trying to move us back to a worldwide tax system from a territorial tax system, but there are some things that they think would make the territorial tax system we have now more fair, so to speak. And another thing that I'm sure a lot of people have clients want to be aware of is the proposals to repeal the deduction for foreign derived intangible income. So anybody who has their IP abroad, and so that's another thing that I know a lot of people's clients that want to be aware of.
Great. Well, thanks for going over that. You reminded me as you were talking about like the no taxes on tips and no taxes on that of an old expression. I don't remember where I heard it, but basically said during a campaign, the candidates pretend to tell the truth and the electorate pretends to believe them. But
there could be a lot said about that. Yeah.
Yeah. So, but anyway, we'll get to that question of what's practical and realistic in a little bit. So what do the mainstream economists have to say about these two plans? What do they see as the pros and the cons for the economy, individuals and businesses? What are they saying about the possible impact on the deficit and GDP? Like, is there sort of a consensus out there with the mainstream economists?
I would say, if there is consensus on anything, it's around the impact of the deficit. And I would say that deficit concerns are the things that you will hear economists say. That's where the rubber's going to hit the road, right? The candidates have their proposals, and I think most mainstream economists have been a bit, I would say, be measured, right? Like, of course, if you want to go to your particular corner of the ideological spectrum, there's economists who are on the left to support left proposals and on the right to support right proposals.
Right.
I think that those in the middle are kind of saying that you can look at individual proposals, but it's not until you have a whole bill in front of you that an economist could really give you a sense of what the macroeconomic impacts of that would be. However, I am seeing a consistent thread of economists talking about how the restraints by the federal deficit will affect, I would say, what's the art of the possible, right? So I was reading and seen it quoted a few places. The Congressional Budget Office estimates the annual federal budget deficit in 2025, it's going to exceed $1.9 trillion. So contrast that with 2017, when Tax Cuts and Jobs Act was enacted, the US federal deficit was $655.7 billion. That we're in a whole different place now. And so, even if you ask the CBO how much it's going to cost to extend all the expiring Tax Cuts and Jobs Act provisions, $4.7 trillion. These are just massive amounts of money. And so that's what I do see as a consensus point from economists right now when you look and read is like, hey, they're saying a lot of things, but it's really going to bring some restraint when lawmakers are in the room and they're having to deal with those deficits and those scores. And I was actually on Capitol Hill when I was a tax counsel for a member on the Ways and Means Committee and trying to work on the Affordable Care Act. Those deficit concerns come in, and those CBA scores matter, and that's where you'll really see lawmakers have to make some tough choices.
So let me ask you this: who do you see as some of the winners, or who I won't, I won't. Who are, as far as the people who are, commenting and studying on this plan? Who do
Mm-hmm.
they see as some of the winners and losers of under each
Well,
plan? I guess.
I mean, right now, in a way, like I said, everyone's a winner because they're all chasing votes, right? It's very Oprah.
Oh,
You get a tax break, and you get a tax break, and you get a credit, and you get a
got
deduction.
it.
So everybody's very happy. You know, I mean, yeah, I think it's early to say who's winners and losers. I will say this though. I think that depending on which proposals make it through when Congress goes to make sausage, of course, there's going to be
Yeah.
some negative consequences. And I think the important thing for people to know is to let their clients know that everything is up for grabs. The Ways and Means Committee Chair Jason Smith said as much. He goes, "Whole tax code is up for grabs right now," and that's why you've seen the leaders of the tax writing committees having these different teams working and plans, some official, some unofficial, to try to prepare for next year. And so with that, it, whether you are a multinational company, whether you are in a partnership, um, if you are in an LLC, any pass-through entity, if you are in high net worth or regular, wage worker, you need to be paying attention and preparing yourself now
Yeah.
to be prepared to make the case. Because if they do take action next year, and a lot will shake out over how the elections play out, action could come quickly. I mean, I remember
Yeah.
Tax Cuts and Jobs Act was a lot of kind of grinding, and then it happened in the blink of
Yep.
an eye. Um, and so, what's that adage? If you aren't at the table, you're on the menu.
Yeah. Yeah.
Uh,
Yeah.
so yeah, the work is being done now for people to scenario plan and to be prepared, to go in and see I'd say local elected officials at both the federal and the state level to make their case, so that people know why their position, can articulate why their position is the correct one that lawmakers should take.
Right. Must be really tough though to advise clients or even to do yourself when who knows what could possibly, I mean, their two plans are so different. Um, and you don't always, when people are looking at these plans who aren't, let's say, politically savvy or economically savvy, they often think, well, if that's what the candidate said he wants to do, then that's what'll happen if he gets elected, and they forget about Congress and
If
reality
only it
and
were
all
that
of that.
easy.
Yes.
Yeah,
So,
yeah.
I mean, who knows what the tax rules and laws will
Exactly.
look like in half a
The
year.
one the one caveat to that, I guess, would be, since we were talking a little bit about tariffs, right, is that, that's the one place where president can act unilaterally.
Yes.
Uh, mhm,
Right. Right. So,
mhm.
sort of piggybacking on what I started to say, what happens if there is a divided government, which is quite, possible? You could have one house controlled by the Democrats, or um, um, the presidency controlled by the Republicans, vice versa, in the Senate. In this hyper partisan age, do you think if that was the situation, one way or the other, divided government, that the Republicans and Democrats would be able to reach any kind of compromise? And what, I know this is really, you don't have a crystal ball, but what might that look like if they're forced into that position?
Yeah, I think so. This won't come as a surprise, right? Anyone who's been paying attention even marginally knows that it has been increasingly difficult in the past few years for lawmakers to find common ground, especially on things of when it comes to fiscal policy, to economic policy. Trying to achieve bipartisan consensus has been increasingly difficult, and I'd even say significantly difficult. And that's compounded by the fact that you also find internal tensions within the parties. You on the Democratic side of the aisle, you find, new Dems and progressives at tension on points of economic, on tax policy and economic policy. Inside the Republican Party, a lot has been talked about this political realignment. So there's this tension you've seen grow between your traditional, quote unquote, Chamber of Commerce Republicans, in this new class. Some people kind of describe it as a working class Republican. It's a little bit more suspicious of big business. And I think that
Right.
makes it very hard for, I mean, you see it. You look at Congress; they will have a hard time, even getting. For example, House Republicans have a rule that you don't put something on the floor unless you have a majority of House Republicans support it. Well, sometimes you'll see Speaker
Mhm.
Mike Johnson not put a vote forward because you don't have consensus within. So, all that to say, if we are in a place of divided government, I think that what a lot of what we've heard promised is going to be left on the cutting room floor.
Right.
Things like significantly raising the corporate tax rate, significantly lowering. These are things that are just fundamental to the party's view on taxes. You just won't see that kind of thing happen. I think that what you increasingly will probably see is kind of a bit of a status quo, maybe kicking the can down the road effort. Um, or you could see some things kind of taken in bits and chunks, and it's hard to describe, to predict what that might be like. And when I
Right.
say taking it in bits and chunks, when I was um, working on Capitol Hill, I recall being there when the Bush tax cuts were expiring, right? And it was interesting because I had been in private practice prior to that, and I remembered helping clients plan for 2008, 2009, and 2010 scenarios. Well, then I go to Capitol Hill at the beginning of 2009, and the first thing President Obama is facing, as we were in the throes of that economic crisis, was, well, what do you do about these tax cuts, right? Now, you may recall him saying that, no one's taxes on, if you make less than $200,000 or $250,000, you weren't going to pay more in taxes. And what we saw happen for probably a 1 to 3 year period was a variety of kicking the can down the road on certain things of tax
Yeah.
policy. Maybe we extend this, maybe that shakes out. And it really was this, it reminded me of, when I was a kid, my mother used to have us lay straw in the yard, and you'd have to pick up these bales of hay and just kind of shake, and it falls where it may. That's how we could see this, this play out if we're divided government. The numbers going to be shaking, and we'll see what ends up hitting the floor. Um, the only There is one place though that I'd say has been a bit of a very positive note when it comes for bipartisan consensus on tax policy, and that's been retirement security. For the past few years,
Yeah.
we have seen, bipartisan, bicameral agreements on things like the Secure Act or Secure 2.0. Like there is a true, genuine interest for both Republicans and Democrats on the tax writing committees to say, like, hey, these are some things we really care about that we can do to, whether it be alleviating, administrative burdens for plan sponsors, anything you can do to incentivize people to save. That's generally seen as something that's a very, was it apple pie and cracker jacks or what have you? Or I
Right. Right.
butcher
Apple
expressions
pie.
all the time.
Right.
Thank you. Yes. I'm Puerto Rican. My metaphor would be completely different, right? But
Okay. Yeah.
and then on the business side, I would say you also see bipartisan consensus around incentives for research and development. R&D, making it in America right now, everybody likes that. You think about things like you saw the CHIPS Act, you saw in the Inflation Reduction Act. You know, these are things that I would say for the past, 5+ years, both Republicans and Democrats want to help companies and incentivize them to develop their technologies in the US to keep their intellectual property here. So that's another place where you could find some limited, kind of things done along the edges to where you'll have bipartisan consensus.
So let me conclude with a question very important to the folks in New Jersey, New York, also
Mhm.
California, and that has to do with SALT, uh, the state and local tax um, deduction. So that, in general, New Jerseyans were hit pretty hard by the cap, $10,000 cap that was passed, I guess, in Donald Trump's first presidency. Now,
Mhm.
both candidates, if I believe, if I'm correct, have said that they would scrap that cap.
Mhm.
How is this one of those things that is like we discussed before? I'll pretend to tell you the truth, and you'll pretend to believe me. I mean, are they really? Is it practical? Is it doable? Is it too expensive?
So this is a place where the partisan divide is real. Um, this is a provision where I would say, I said, well, some people would gladly let certain pieces of TCJA expire. On the Democratic side of the aisle, Democratic lawmakers have been fighting tooth and nail to get rid of the SALT cap. I mean, like you framed it within terms of New Jersey, but ever since the Tax Cuts and Jobs Act was proposed and the SALT cap was there, it set up a fight between, the quote unquote blue states and red states,
Right,
and there was
right,
definitely people who wrote and said, yeah, this is a transfer of money, from the coast to taxpayers, in the middle of the country. So yeah, Democratic candidates would gladly let that SALT cap expire, come December 31st, 2025, and say good riddance. Um, I will say it came as a surprise. And I don't mean this in a partisan way. It did kind of strike me when former President Trump was in Long Island and all of a sudden said, "Yeah, we should get rid of that SALT cap." And I was thinking, that was yours. I don't.
yeah. We'll
I'm
see.
laughing and I don't. And I, it just that was one of those moments I don't think anyone expected. And so campaign theater aside,
Yeah,
um, I do think it would be hard to predict a place where you get all of a sudden a significant amount of Republicans to go on board to remove the SALT cap. To be
right,
fair, though, I that is not a universally held opinion. As
right.
anybody watching this knows, I would say that Republicans in New York, in New Jersey, Republicans even in California, there are definitely Republicans in states where people have been significantly hit by the salt cap, and they have been doing the hard work of trying to, of both, I would say, speaking on behalf of the constituents they represent, and really trying to push Republican leadership into a place to at least, they just even want to get a vote on it.
Right.
But I, again, I would say we would have to see where the elections shake out, because while there was not Republican support for dealing with the salt cap and getting rid of it in the current Congress, who knows what the next
Yeah.
Congress could look like. If you have a different Republican conference, if you do have more Republicans from New York, for example, right? Or if the stars align in a certain way where, the numbers work out where they say, we have some vulnerable Republicans that we really need to take care of. Let's play around. Let's see if we can modify the salt cap in some way and
Yeah.
still do some things that we care about. That's also possible. So just because it's not popular on the Republican side of the aisle now, doesn't mean it can't be in the
Right.
future.
Right.
Um, but yeah, but yeah, letting the salt cap go and going back to pre TCJA, Yeah, you could get Democrats to sign on to that immediately, which is possibly, and I don't know, I'm not in Speaker Mike Johnson's head, but I'm sure that's part of why you didn't see it go forward more, because if you did take just a
Yes.
handful of Republicans in the House and then all those Democratic votes, then you'd have a House position of saying, yes, let's get rid of the SALT cap. The Senate, again, this is where we have to see how the elections shape out. You have, there's a lot more Democrats up for reelection. The Senate Republican conference could look very different next year. So we'll have to wait and see. I know it's a long, drawn out analysis, but there's,
No, it's very hard to say anything about anything.
right.
I certainly
Yes,
wouldn't.
exactly.
I I wouldn't bet on the SALT cap going away, but I wouldn't bet against it either.
Right. Exactly.
It's like, well, ask me in 2 months, and then ask me another
Right.
2 months later. And but anyway, this has been
Right.
really good.
I live in Washington, D.C. Let it go.
Well, hey, I'm thinking the same thing. I live in New
Exactly.
Jersey.
Yeah.
This has been really great. I've learned a lot from you, and thank you so much for joining us today.
Thank you. It's my pleasure, and I hope that I was offered to at least make some sense of the madness we're all living in right now.
Thanks for listening or watching. For legislative news and information, visit njcpa.org/advocacy.